Our fear, greed and hope survey shows we don't fear that damn coronavirus. Will there be a second leg down, and are amateur investors smarter than the pros? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, let's kick off with our Switzer fear and greed and fear survey. Fear, greed and hope survey.
I think fear, greed and hope, yeah.
But we don't fear the coronavirus, Paul. The numbers are interesting. We'll quickly go through it. So in February, when we did the last survey, 30% of investors thought the stock market might rise by 1 to 5%. That shrunk to 15%. But in February, only 7.6% expected an 11% plus rise. That's grown to 23%. And around 62% of investors think it's a good time to invest in stocks.
Well, I think we've seen just the action, Peter, in the market. Most retail investors have been buying. I mean, despite what you hear on the ABC and all the other fear programs out there, most investors are, it's a buy the dip and saw this as something that's a huge opportunity. It went down so fast, Peter, and I think that's why people have had the courage to buy into it.
Yeah. But has the reopening and the success with the infection been really important?
Well, I think in Australia's case, the fact that we have done pretty well by the virus, I think that's encouraged investors. Look, I think that's all part of the story, Peter.
Yeah, okay. So let's go to the second big one. Okay, this is great, and we're all benefiting from it if you're invested in the market after the crash. Could there be a second leg down? And rate the could.
Look,
I think
the second leg down is unlikely. I think that's now. We're back into the bear market is over. I mean,
in Australia, we're out of the 20% fall.
And in the US last night, we almost got the 200-day moving average on the S&P 500 to close above. And
Goldman Sachs was up 16%.
So the US is out of a bear market. Australia's sort of probably out of the bear market. I think the second leg down is unlikely. I do think that the China trade thing, the whole China issue, is another story, Peter, and it's not going to be virus related. This is more about how Donald and the Chinese play out their war.
Can Donald afford to send the stock market down, Paul?
Well, he can't. No. He needs the US economy to be firing again. He needs to be able to come in. Not, I won't say the hero, but say, look, this was something that was a curveball. Everyone played the curveball. I played it better than most. Yeah. And by the way, the US economy is strong because of my policies and my government. That's what he needs to be able to say.
Yeah, and he will say it no matter what.
He'll be able to say it. And this guy called Biden, he's asleep at the wheel and whatever else, right? Let him wear the black mask, right?
That's a coronavirus gag, that one.
It's a coronavirus gag. So he doesn't want a trade war, but I think there's a bit of rhetoric about sort of making it the Chinese virus does play to his base a little bit, but we need to make sure it doesn't get out of hand. So that's the risk for, I think, the market.
Okay, from our point of view, you and I both have been talking up the likelihood that bank stocks would do well. They've done well, probably faster than what we would have thought, but this is a sign that...
You're looking like a hero, Pete, because you had the courage to write about this over the last couple of weeks. Yeah, well, the market, I think, it does go, it's almost like a herd, right? Everyone still wants to buy the IT companies. We followed the US lead. Then there gets super expensive. And then what's next? Okay, well, finally they work out that resources are next because of iron ore and everyone buys that. Then finally they work out the poor unloved banks. That data last Friday, if there's 3 million people less on JobKeeper,
correct,
right? Yeah. That's a huge positive for the economy, right?
And all those bank provisions and all that sort of stuff.
And the people that are going to be most impacted, the banks, look a lot better. Yeah. Why it took a couple of days for it to work that out, I don't know. But that's what we're seeing.
Well, it's good to see because a lot of people are investing in banks. Now, finally, Paul, the big question is, a lot of the fund managers I've interviewed on my TV shows were holding cash. They expected a second leg down. The amateurs or the mums and dads or the retail investors, they've got in. And there was a bit of there's sort of some cynicism about these people getting in. Do you think the amateurs have actually got it right over the pros?
I think the amateurs are overall net buyers. When markets fall, they buy, and in the long run, if they hang on, they do okay. And the pros and the instos are all just. I think all the data shows the amateurs actually do a lot better than people think they do.
Yeah, right? And Paul, I reckon also because of online trading and the level of financial education, particularly in stock brokers, and remember, 10 years ago, there was no business channel, and there was a 10-year business channel. There's no business channel again, but still the bottom line is people have been pursuing information about stocks for a long time, and they've worked out if they're long-term investors, they buy on the dips, They just wait for the market to come back.
Well, here's another example. The AML's doing well. The NAB share purchase plan, Peter.
Yep.
Its results are out this morning. It's been increased from $500 million to 1.25.
Good for the mums and dads.
Half a tick to the NAB directors. It should have been $2 billion. I mean, but at least that shows you they've been swamped with offers from retail investors buying
And complaints.
And complaints. Look, it's probably they've done okay in terms of the plan, but these are not the best way by all shareholders. The rights issue, whether it's a non-entitlement or entitlement rights issue, is so much fairer than these share purchase plans. But at least, again, the amateurs have got in. NAB directors have heard the noise.
Yeah. And you made a fair bit of noise.
And I did, and they've increased it from $500 million to 1.25 billion. Those shares are at $14.15. NAB's in the high $16.
Yeah.
Again, a good example of the retail investor showing they're not stupid, right? When you show them a bargain, you offer shares below book value, they buy.
Yeah, and it's making Ross McEwen look like a pretty good new CEO of NAB. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.